Hey everybody, this is your technical update for Thursday, March 31st. And let's get started. Hope everybody's doing well. Just quick note that it's the 31st. Not only is it the month end, but quarter end. And so sometimes you get month end, quarter end flows, a little bit more volatility at the end of a month and certainly at the end of the quarter. And then, really, I don't expect it to factor too much into trade because most of it has happened, but it's also fiscal year end in Japan, which, could impact, yen related flows. But that's just a quick note for today, just so you have that in mind. I guess while I'm mentioning things, we do have a good deal of economic data out on Thursday across the board, but the market will also start to position ahead of tomorrow's NFP report out of the US, which should inspire some volatility. Okay, let's get started. So where am I positioned right now? One position at the moment, and that's short Kiwi dollar, right around current levels. 68.90 is my short position. I reserve some space here to sell some more up towards, if we see another surge up towards the 70 area. I like this trade on a medium-term basis. This isn't just a short-term idea. I think fundamentally this is a solid medium-term trade where I think there is some significant downside ahead. At the same time, we'll have to see how the price action goes and how things play out over the coming sessions to determine just how long I hold and what I do with it. But certainly this impressive rally that we've seen over the past really several weeks since early January, I think should show signs of stalling out as it gets up here above 69 and towards 70. So we'll see. But again, holding a short position right now, and would need to see a break and close back below the low from Wednesday at 68.41 to strengthen this outlook and accelerate decline. So this is a key low right now on a short-term basis, at least for our trade. We need to see a break back below this level here to get things going to the downside. Again, otherwise, it's pretty much the same across the board. We've seen 2016 highs, which we saw in Kiwi on Wednesday. We saw it in Aussie also with that rally up on Wednesday, and also in dollar CAD, a 2016 low. Not as much with Kiwi. So let's go back and take a look and see Kiwi. We don't see this, what I'm about to show you with Kiwi as much, but certainly with Aussie dollar and dollar CAD, you're seeing the possibility, despite these latest moves higher, for, the potential for a double top up here. Double tops aren't always perfect. We don't always exactly match the previous top. Sometimes we'll get up there around those levels. We won't close above the previous top. So depending on what happens, there is a possibility that the Aussie dollar stalls out and trades lower over the coming sessions, back towards the neckline of what could be a double top around 74.77, and so pay attention to that. If we see a reversal now that takes us back below 76.14, 76.15 today, that could strengthen the possibility of this double top in Aussie dollar, and then open a move down towards 74.75. And then if that triggers, then you're looking at a move back down towards the 73 handle. Back down to the 70. Around 72.50 maybe area. So that could be something to watch. And the same thing with dollar CAD. Dollar CAD, as much as we've just put in a 2016 low, we have to remember that we've seen a correction of over 10% off the January peak. And now, we could see a double bottom here. And if the market establishes a break back above recent highs that came in at 132.96 about, that could open the door for fresh upside and trigger a double bottom that takes us back into the 137. So pay attention to that. Otherwise, there's nothing much that I have to talk about right now. The euro, continues to sort of just chop around, trading in sort of a sideways. We've stalled out just shy of the 2016 peak from February. Very difficult to determine direction, as I've said, with the euro. The S&P 500 is interesting. I haven't taken any positions there, but certainly this rally, I think, is exhausted. I didn't really expect it to extend beyond 2050, and we've rallied up above to 2070s, but I do continue to think this market stalls out, and a break back below the low that comes in around the 2020 area would strengthen this outlook and accelerate declines. So that's pretty much the story for today. today. If I see anything on the trading front, I'll let you know. But again, we're currently in that Kiwi short, looking to close out another strong month for the book, which has had a really, really good year. And we'll see how things play out into the end of the month. But keep an eye out, and we continue to sort of check those results as they go. And looking forward to April. So have a good one, and we'll see you back on again tomorrow.